Hello and welcome to our latest video, Beyond Mega Cap Tech, the new engines powering the market rally. As we track the market, one thing is clear. While AI and mega cap tech still dominates headlines, today's market map looks different. Energy, industrials, materials, and small caps are powering ahead as investors rotate into cyclical and value sectors beyond mega cap tech. For sophisticated global investors, it's a calculated move to cut concentration risk and chase fresh growth engines. Let's unpack what's driving the shift and how savvy investors can access it via US stocks and ETFs. Why the excitement? Forces are powerful. Rising oil prices are propelling energy. A manufacturing revival is boosting industrials and materials. And soaring AI-related power demands is supercharging energy infrastructure. Small caps are outpacing large caps, showing market participation is broadening. The numbers speak. Energy Select Sector SPDR Fund Energy is up roughly 18 to 20% year to date. Industrial Select Sector SPDR Fund XLI registered double-digit gains. The Russell 2000 has outpaced the S&P 500. Some energy ETFs such as Vanguard Energy ETF, iShares US Oil Equipment and Services ETF and First Trust, Nasdaq Oil and Gas ETFs are blasting higher around 38 to 39% this year. The key question, is this structural broadening or a cyclical rally? The narrative shift is not anti-tech. Technology remains central. Semiconductors and AI infrastructure keeps the momentum. The Technology Select Sector SPDR Fund is still a core benchmark, and semiconductor ETFs such as VanEck Semiconductor and iShares Semiconductor reflect the chip and AI boom. Where to look? Energy Select SPDR Fund, Vanguard Energy ETF, iShare US Oil Equipment and Services ETFs and First Trust Nasdaq Oil and Gas ETFs have drawn investor interest. Industrial and materials. Gains tied to infrastructure spending, reshoring, defense demand and commodity themes. The fundamentals are separate from tech. Material funds. Material Select Sectors SPDR Fund, SPDR and S&P Metals and Mining ETF, Invesco S&P 500 Equal Weight Materials ETF offer clear exposure. Financials. Financial Select Sector SPDR Fund has delivered steady gains, adding to broader market participation. Small caps. Russell 2000's outperformance signals deeper market breadth. What it means. 2026 markets are broadening and the breadth that creates exciting opportunities beyond tech. We have identified the sectors that could benefit from the next phase of growth. ETFs are ideal. They provide clean, efficient sector exposure while limiting single stock risk. Remember, cyclical rallies can reverse if oil falls, manufacturing cools, or macro conditions shift. Stay disciplined, rebalance regularly, size position sensibly, and be explicit about what would invalidate your thesis. That's it from ET Markets. I'm Dhruv Mohan. See you next time.